Hey everyone, welcome to my channel or welcome back to my channel. My name is Gus. I'm a finance student and an avid investor. Today I'm here to talk about e.l.f. Beauty, ticker e.l.f. Before we jump right in, it takes me a lot of time to prepare these videos and give you guys the best content possible. So make sure you like and subscribe so you don't miss the next videos. Today we are talking about e.l.f. Beauty. This is a stock that I have covered for a very long time. I have owned this since the beginning of 2025. Maybe it might have been 2024 actually. I might have started buying it in December 2024. I don't know. But this is essentially a cosmetics company, a collection of cosmetics companies under the brand e.l.f. Beauty. We have essentially the flagship brand, which is e.l.f. Cosmetics. Think of e.l.f. Cosmetics as very highly accessible beauty company with low cost items. So of the vast majority of their items are under $10, and they do a lot of dupes, which are basically cheap versions of high-end products with very similar formulas. e.l.f.'s thing is their accessibility and their marketing. They're very popular. We'll get into some statistics later, but they're very popular among Gen Z and just young people in general. And e.l.f. is in if you go to any Target, Walgreens, Walmart, Dollar General, e.l.f. has tons of shelf space. So that's kind of their position in the market. They have lots of skincare, cosmetics, and if you're unfamiliar with e.l.f., a lot of, something like 90% of the people who watch my videos are men. And obviously men don't use cosmetics or makeup nearly as much as women. Ask any woman you know. Or any person who regularly wears makeup or cosmetics, they will know of e.l.f. Cosmetics. Very, very popular brand, and they've seen explosive growth kind of coming out of COVID, and through now, they're continuing to grow. However, that's not the full story with this company right now. Naturium is a smaller part of the business. It's also kind of a, not really makeup necessarily, more of a skincare and kind of like a body care company. It's not really a big player when it comes to e.l.f. Beauty and the company in the stock at large, but it's just something to note. It is a popular brand. Again, may not be as popular with men. However, people who pay attention to skincare and kind of the beauty space will know of the brand Naturium at the very least. Know of them at the very least. If not, they may have used their products before. So Naturium, it's there, but it's not the real growth engine right now. The real growth engine, the part that's really exciting, the part that I love about this company, and the part that I think is really going to drive sales over the next 5-10 years is rhode. Rhode is kind of like e.l.f. in that it's extremely, extremely popular among young people. And as you can see here, pictured on the left, that's Hailey Bieber. This is her brand. She started it, I believe, in 2022. And from 2022 to when e.l.f. Beauty acquired rhode in 2025, the company went from essentially $0 valuation because it didn't exist, $0 valuation to $1 billion valuation when e.l.f. Bought the company. So e.l.f. bought the company, I believe it was Q3 of 2022. I think got announced not 2022, Q3 of 2025, but it got announced, I believe, in Q2 of 2025. Don't quote me on that, but rhode is an extremely, extremely popular company, much like e.l.f. Beauty or e.l.f. Cosmetics. Rhode is like far and away the most popular celebrity skincare or cosmetics brand right now. Like Selena Gomez, Ariana Grande, like there are tons of celebrity brands, and there are plenty that are successful. None of them are remotely close to rhode. And they're just getting started. Rhode is just getting started with their international expansion. We'll get into that more later, but rhode is a true powerhouse. Another thing to know with rhode is they're more targeting kind of a middle to higher end consumer. They're not at Target or Walmart, but they are at Sephora. They are at some Sephora locations. They do most of their sales direct to consumer though from online. So rhode is able to put up much higher margins than e.l.f. Cosmetics and kind of target a different, not a completely different consumer, but a consumer with different intentions. I feel like, the basic e.l.f. consumer is just going to the drugstore to get, resupply their mascara. A regular rhode shopper is someone who may be taking more time to shop, who may be, walking around the store just kind of looking for something to buy. Someone who may have a little extra money. So That kind of separates the two and makes a really interesting dynamic because there's not really a huge risk of cannibalization, and they're kind of able to target different areas of this market. So, moving on, just some figures that show the growth of this company and getting to the actual nitty gritty. 29 consecutive quarters of net sales growth, and they are one of 6 companies out of 546 consumer companies that has grown for 29 consecutive quarters. This is quarterly revenue. So very, very impressive numbers from e.l.f. As you can see here, I want to kind of explain this because I don't have a SWOT analysis slide or anything, but I want to explain during fiscal year 2025 and kind of going into fiscal year 2026. So a few things to note when it comes to e.l.f. Their fiscal year is essentially 3 quarters ahead of the regular fiscal year. So there's a slide or two that kind of shows that their fiscal year 2026 is done. That's because it did just end. It looks like fiscal year 2026 is complete. That's because it is. So they're basically 3 quarters ahead. But anyway, just relentless growth from this company. They did hit, during 2025, fiscal year 2025, and the beginning of fiscal year 2026, they did have some trouble because, first of all, they were coming off really tough comps. I mean, like e.l.f. had just taken up, like grown like crazy through social media and just gaining a ton of shelf space. They hit a point where the comps were going to be hard. They just weren't going to be able to grow at a pace. Like it wasn't realistic to grow at 80+% anymore like they were in 2023. So that was kind of throwing investors off. It's a very volatile stock. e.l.f. it's a growth company. It's a growth stock. And also during 2025, during the Liberation Day stuff, e.l.f. got hit really hard by the tariffs. They suffered a lot from that because they have to ship, they sell physical products. So they have to manufacture things and ship different parts and ingredients and things from all over the world. And those tariffs really hurt the company during 2025, or I guess fiscal year 2026 for e.l.f. So that's kind of why in these slides here, you kind of see growth really slowing down in fiscal year 2025 and into 2026 before the rhode acquisition. But regardless, amazing growth from e.l.f., just exactly what you want to see from a company showing extreme consistency. And these numbers here, this is trailing 12-month revenue. This is through 1000xstocks.com. And again, it kind of just shows the lull during later 2024 and into 2025. However, 2026, I mean, this is regular 2026. This isn't fiscal year, or this isn't e.l.f.'s fiscal year. This is the regular fiscal year. And these are the projected numbers. So e.l.f. is really expected to kind of get back on their feet when it comes to growth rates. There's still some skepticism when it comes to e.l.f. Cosmetics, their growth rates, but we know rhode is going to continue to smash numbers, and I'll get to some more of those later. But anyway, I just wanted to show these trailing 12-month numbers because they show a little more of the consistent trajectory that they're on, and just where you can kind of see things recovering through the rest of this year. But on top of that, looking at their earnings per share, you can really see, I mean, this quarter, this is Q1 2026, they're Q4 of their fiscal year 2026. This big, red one. This was just a one-off thing, though. It's not something to worry about consistently. But if you look at, I mean, a couple years ago, they were really growing these earnings per share. These are quarterly earnings per share. And as you can see now, for the projected the rest of the year, we're really expected to get back on track and hopefully hit some all-time highs when it comes to earnings per share over the next, we'll say, 9 months or so. So really, really strong numbers from e.l.f. just from an objective standpoint. Like, these are the type of things that you want to look for in a company, specifically like for the next year. They had a lot of growth. They tapered off because of a few things. Those things are now behind us. And we have a new catalyst with the rhode acquisition that took place last year. So a lot of good things lining up for e.l.f. I wanted to read this. This was just kind of random, just something I thought of. I typed into ChatGPT, what are the top 3 most purchased beauty brands by Gen Z in America? And the answer was even surprising to me. I knew e.l.f. was going to be number 1. But number 3, Maybelline, about 6%. Number 2, Rare Beauty, about 8%. Number 1, e.l.f., about 36% share among U.S. teens. 36% compared to the number 2, 8%. That's 4 times the number 2 competitor. Like, it's not, the quote at the bottom here kind of says it. Among U.S. teens, e.l.f. isn't just popular. It's the clear cosmetics leader, with Piper Sandler data showing it far ahead of Rare Beauty and Maybelline. Far ahead doesn't even cut it. Like, they're just leaps and bounds in front of these companies. It's not even realistic that they like catch up in any sense. So obviously running a very competitive game here, and their competition just cannot stand. I mean, this basis point change, 7-year dollar share change in basis points. e.l.f. number one with 920 point gain. Number two is NYX with 240 gain. And a lot of these, I mean, like look at L'Oreal and Maybelline. We were just talking about Maybelline is, I mean, Maybelline is one of the leaders in, it's supposed to be one of the leaders with teens and like young people, and it's struggling here. It's been struggling over the past several years. So like, it's just a clear winner all around in this space. And this is a space where like, L'Oreal, Estee Lauder, a lot of these companies have really been struggling when it comes to the current market. They're really struggling to adapt to the changing consumer, because it's just like, I don't know, things are really changing a lot right now when it comes to e-commerce, and e.l.f. has always done a very good job at staying up to date and spotting trends and taking hold of them. So just something to note there. Just more data. This is from their latest investor presentation. Number one Gen Alpha most purchased, number one Gen Z most purchased, number one Millennials most purchased. So when it comes to just like actually getting products from shelves into consumers' hands, no, they're completely uncontested. Like e.l.f. Cosmetics specifically, that is the company people go to when it comes to just like accessible, affordable, but still decent quality makeup and skincare. A lot of these legacy players, they're worried about, keeping the 60-year-old woman who comes into Nordstrom every couple months. They're worried about keeping that customer. They're not worried about, acquiring customers who are going to be with them 15 years from now. And that's where e.l.f. sets themselves apart, in my opinion. They're really targeting a young consumer and targeting them in such a way that they're going to be customers for years and years and years. Like makeup products in general and skincare products, there's trendiness, there are trends to follow, but when people find a really good and very accessible product to them, they're just going to keep using it. They have no reason to really change unless they're given, a really strong incentive. So just something to note within this industry, and how dominant this market share already is, how many avenues that can open up for them. Additionally, e.l.f. hair care, we're going to get into their projections a little later, but this is just something they announced. e.l.f. is a very innovative company, and was specifically e.l.f. Beauty, or e.l.f. Cosmetics, I guess. They were, if you don't know, e.l.f. stands for eyes, lips, face. And this hair care line, I mean, it's kind of just starting. Obviously, only 6 different products, and 5 out of 6 of them are under $10. But they just announced this and released it, I think, about 2 months ago, and it's not in their projections at all. And this is something e.l.f. loves to do, is they underpromise and they overdeliver pretty consistently. Because we had no idea about this hair care thing. They didn't, make it up to be some really giant, exciting thing, even though it is, and they very well could have. But they're just so on top of things and so innovative that it's just, it's just another thing that they're doing, that they're killing it on. So, again, I think a lot of these products are dupes. They're very similar to higher end products. So e.l.f. is really just doubling down, continuing to double down on what they're offering, and the type of brand that they're identifying themselves as. So this hair care is really exciting because these numbers are not even in their fiscal year 2027 guidance. And, they just launched them onto shelves in their Q1 fiscal year 2027, which just started back in April. So this is really exciting. They're just a company that continues to underpromise, overdeliver, and really innovate and connect to the consumer. So just continuing to expand and do things that competitors really are not. I wanted to highlight rhode with a couple figures here, because rhode's figures and rhode's numbers are kind of the heart and soul. They're the engine behind e.l.f. right now, and especially with the company and the stock, that's really what's going to propel them over the next few years. That's not to say that, Naturium and e.l.f. Cosmetics aren't important brands and aren't, relevant. They're highly relevant, but rhode is just, they're at a stage in their brand right now where everything is just so exciting. So they just crossed $500 million in global retail sales. Mind you, they were doing, I believe, in 2024, they did 212 million in revenue, something like that. So, as you can see, 80% year over year net sales growth. to 390 million annualized net sales. Like, these are just insane numbers, mind you. Rhode, I tried to find there was a tweet or a post. It essentially said that Rhode got their highest volume day ever back, I think, earlier in June. They did a big drop of a bunch of new items, and they like sold everything out to the point where they had they didn't have enough inventory. Like, they literally ran out of inventory. Now they, Rhode and e.l.f, they have to work together. Or I guess the company just has to work to get the company or Rhode more inventory and just make more products and make them faster, which is, it's kind of suffering from success. Like, the company's doing so well, but you gotta fix these products quick, or else people are gonna lose faith and move on to the next thing. But just Rhode's sales are absolutely insane. Extremely hot company. Record-breaking stuff, and #1 in North America at Sephora. Record-breaking launch in the UK, and I believe, I don't, correct me if I'm wrong, but I believe Rhode is only in about 20% of Sephora stores so far. Rhode is going to continue to position themselves in not just Sephora, but other chains and other individual stores that kind of offer similar things and offer similar products, because they're very focused on their brand. Rhode, they could get a ton more revenue just throwing all their stuff into Walmart or Target, but that would hurt their brand value. People would want the products for cheaper then, because people go to Walmart and Target to buy, cheaper. They're going to Walmart and Target to buy e.l.f. They go to Sephora to buy Rhode, and that's why I'm not worried about cannibalization or anything when it comes to these brands, because they just fundamentally do different things. Now, e.l.f, what's really interesting with this company is how little they have penetrated the international market yet. In the beauty space, I mean, it's almost all international. Not all international. There's still a big American market, but as you can see, on average, 70% of global sales from their beauty peers are not from the US, or not from North America, I suppose. And only 20% of e.l.f. Beauty's sales currently are from outside the US. This is just such a huge and obvious opportunity to them. I think it's very clear e.l.f. is already expanding a lot into Europe. They're expanding into, I believe, Australia, and of course, like Asia and Latin America usually follow that. These are both companies that are going international and have a massive long runway of international growth ahead of them just by putting the products on the shelf. So that, in addition to growing in the markets that they're already in, like America and like certain places in Europe where they're already positioned, it just sets up very well for the company. Now, moving on to top line growth for fiscal year 2027. Like I said earlier, they are very conservative, and this is a very conservative projection. 12 to 14% net sales growth, with about 9% of that coming from Rhode and 4 to 5% coming from their other brands, or organic growth. My guess is they're going to beat these organic growth numbers, and they're going to beat these numbers when it comes to Rhode. Like, I think it's going to be, high single digits organic growth and mid double digits, or, probably mid teens, like 15% growth coming from Rhode. That's just my expectation. But this is what they do. I mean, again, they made these projections before releasing that hair care line, before they, broke that new record with the Rhode drop that happened earlier on this summer. So just continuing to underpromise and over deliver, and that's why I think this company sets up really well, because I don't think this has really been, people have been taking notice of this, and they're just continuing to put in the work and set themselves up really well. So before we get into projections, I wanted to show you guys the consensus outlook. This is also through 1000xstocks.com. And essentially, these are for the regular fiscal years. These aren't e.l.f.'s fiscal years. So for 2026, we have growth, roughly top line growth to 21%. For 2027, only 10%, a little over 10%. Low ball, if you ask me. But anyway, net income for growth for 2026 only at 100, or net income at $105, only growth of about 1%, which I think they're probably going to beat that. But for 2027, the growth is over 128%. So we're kind of making up for things in 2027 with 2026 kind of flatlining net income. But I just wanted you guys to take notice of these numbers and how we have a really dramatic move in net income coming in 2027, likely, even though top line growth is kind of expected to taper off. However, I think 10% is really lowballing things. I don't think rhode especially is going to slow down that much. But without further ado, let's just get into some projections. So again, I'm doing these with 1000xstocks.com. And this is my bull projection. So this is kind of a very optimistic projection. I'd give like 15% odds of these happening. I don't know. It's hard to give a percentage, but just getting right into it. Revenue growth, top line average of 20%. I think this is doable, especially it really kind of just depends on rhode, in my opinion, and also how quickly they're able to expand internationally and how kind of smoothly they're able to do that. Because, there can be some issues with that. There can be some delays and, delays in profitability as well. Sometimes margins aren't as good in certain international places, but I think 20% revenue growth is very doable for them. I have, beating net income in 2027 with 150% growth. So this is about $20 million in net income over the current 2027 projections, which is not a huge overestimation by any means. And then 22% net income growth from 2028 through 2030. So a slight margin improvement, but nothing huge. And they get up to a 12% net margin here. That's not insane. I just want to, net margin for this company, it's going to be kind of hard to track, but it should eventually get better than where it was with just e.l.f. Cosmetics. Because e.l.f. Cosmetics, the business model the business is built around low margins and low profit per product, but just selling a lot of products because they're cheap and accessible and everybody can use them regularly. So the rhode acquisition, again, rhode is much more expensive products, and they're going to be bought by somebody who is kind of probably spending more leisurely, but it's not just like basic necessities when it comes to skincare or makeup. So anyway, rhode should be able to help increase net income over time, or I'm sorry, net margins over time, a lot more than e.l.f. Cosmetics was able to. So we could end up seeing 15% net margins, but I think low single digits is very doable and realistic for a company like this. So with these type of growth rates, PE of 35 to 45 is very doable, very realistic, I'd say. And this is a company that has oftentimes pushed much higher PE ratios just because it's a growth name. It gets a lot of trading activity. And with these numbers, we have a CAGR low of 35% and a high of 44%, with the stock going $282 to $363. So the stock, I believe right now it's in the 80s. That major upside from where we are currently. And this is not like an insane projection by any means. So that's very exciting. Now, for the base projection, this is kind of what I expect. I'd say I try to go a little more conservative on the base projection just because I want to kind of include a little buffer, just because there are always going to be headwinds that you don't see coming. So revenue growth top line, I have an average of 15%. I think they're going to end up doing probably high teens, but who knows? I mean, we could face more macro headwinds, and tariffs aren't over. Tariffs could happen again. Who knows? Especially with Trump president, like really, who knows when it comes to that. Net income growth I have in line with the projections, so 130% in 2027, and then down to 17%, just getting some slight margin growth from 2028 on, and PE of 30 to 40. We get a CAGR of 24% to 33%, or $196 a share to $262 a share. So these are very strong numbers. Even on a base case, these are numbers that completely crush the S&P 500 on just about any multi-year historical chart. So this is a stock that's looking very good from these base case projections. And then of course you have to run a bear case. You have to run a bear projection, not because I see this position or I see this case as realistic, but just because you could have a stock that has an excellent bull case, has a really strong base case, but then when you run a even semi-realistic bear case, it's a major money loser. You usually want to stay away from those because there are just about always great stocks in the market that don't have that type of risk and still have that type of upside. Just my opinion. I really try to stay away from stocks that give me a significantly negative bear projection. But this one doesn't. This one basically just like it would just be dead money for a few years. 10% top line, significantly missing net income growth in 2027, 70% growth. And then 10% after that, no net margin growth after 2028, 20 to 30 PE ratio, and you end up with $80 to $121 a share. So yeah, I mean, not looking great here, but not looking bad by any means. Like you wouldn't even necessarily lose money. And yeah, that's the kind of thing you want to see in a bear projection. If it's just like meh, if it's just like, putting cash away in a safe, then that's not really a detrimental downside by any means. So those are the projections. All in all, what do I think about this? I think the stock is a buy under $100 a share. I think it's a strong buy under $70 a share. And this is a company that I've researched for about a year and a half now. I've been a shareholder for about a year and a half now, and I've seen their rhode acquisition, the way they've expanded just in the past year and a half, the way that management has taken this company was like, it was like $7 a share back in the late 2010s, like 2018, 2019. It was, it was $7 a share, and it went from $7 a share over $200 a share in, I think it was under 5 years. So this is a really, really exciting company, and it's still at a very good valuation in my opinion. So I think from this, it's a buy under $100 a share. If I were an investor and I hadn't bought e.l.f. yet, I would be watching the stock very closely right now because it's at low 80s a share. I think it's still a buy right now, but especially after this next earnings, I think it's going to make a pretty dramatic move. I think it's going to see a lot of strength going through the rest of the year. So I would be watching for dips it may take. I think it's going to get a lot of attention over the next several years because I think it's a great company and I think it's a great stock. So I hope you enjoy the video. I hope you got something out of it. Again, none of this is financial advice. I'm not a financial advisor. Please do your own research. Let me know what you want me to cover next. I'll see y'all next time. Bye-bye.